Hello, how's it going? In this video, I'm going to be looking at the oil markets and also emphasizing the oil trade in Africa, but also looking at the whole world. So we're going to start right here. This is Wikipedia's page, formation of the OPEC. I know OPEC has its own page, but we can just start here. In 1960, the OPEC was founded in Baghdad, in Iraq, by its first five members: Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela, with Qatar and Libya joining immediately, followed by the Emirates, Algeria, Nigeria, Ecuador, Gabon after a decade. The goal of these countries was to increase their influence in the world oil market, then dominated by a cartel known as the Seven Sisters, five of which were headquartered in the United States. So this was formed in retaliation of another cartel, and then they formed their own cartel, which is technically legal, but that's what OPEC is. These companies had been controlling posted prices since the so-called 1927 Red Line Agreement and 1928 Acnacary Agreement, and had achieved a high level of price stability until 1972. Angola joined OPEC in 2007 and Equatorial Guinea in 2017. So as we can see, there's a lot of oil trading countries in the world, but some of these countries are influenced by the trade that happens in Africa a lot. So I'm gonna take a quick look at the CIA fact book, and right here it's showing us the countries that actually have oil reserves, and the countries in black have oil and petroleum and all of these energies and fuels. So we see oil. This is Angola and Nigeria, and this is Egypt. This is Libya, Algeria, and all of these countries. And these are the Emirates and Qatar, Oman, Kuwait in the Middle East, and Russia. And this is showing these countries by their major exports and what they have naturally, and we also have oil and gas there. So this is basically where you find oil on Earth. All right. So this is the OPEC, and this just shows the different prices and financial crisis and speculation. This is 2008, and yeah, let's just take a look at this. So this is important. Oil prices dropped in 2020 because of the pandemic. So the COVID demand shock caused this contraction in price because they were anticipating a smaller than usual contraction in price. So you can read this small part on your own, but basically this is important. On 20 April, due to excess demand for storage of large surplus in production, the price for future delivery of US crude oil in May had become negative, the first time to happen since the New York Mercantile Exchange began trading in 1983. So this is something that is historical. That's never happened, that the oil price went to negative territory. And as you can see, this is the price of that happening. So basically, what we can realize, so this is zero, and it actually went below zero, near 40, 37, thereabout. So what was happening here was that the people who trade derivatives have a special contract where you can buy an asset so that it can be delivered to you physically. And when they usually make these arrangements, they do it to make profit because there are certain advantages to making that type of trade. So the people who made those trades were supposed to receive a shipment of physical oil, not digital oil. So when the price was going lower and lower, they saw that the cost of keeping this resource was going to be higher than the value that it had. So they were paying people to store it for them. So this is what caused this huge drop. Okay, and this is because usually in our society oil is used every day, and this is how they are shipped. So this whole container will be full of your oil, and you have to ship it, and you have to store it. So this would be okay if there was a lot of demand. So this is an interesting chart. So this is oil and gas barrel production costs. This is, I just found this interesting, although it's a bit old, it's from 2016, but it gives you a rough idea of what it costs to produce a single barrel of oil, all things being equal, what it was then, and hopefully what needs to have to have had changed so that the whole enterprise is lucrative. So at the top we see the most expensive place to produce oil is the UK. You pay a total of $44.33 to produce a single barrel of oil, from capital, production to administration, no taxes. And the country that has the highest tax on oil is Venezuela, right? And at the end of the day, you end up paying $27 for producing a single barrel. So the price of oil has to be above this threshold if you're buying oil from Venezuela, because of all of these costs incurred. The price for oil, if you're buying UK oil, has to be above $44 if you're buying UK oil. And the cheapest price oil can be, according to this stat, is $8.98. This is the cheapest production costs from an area that has a lot of oil. So oil must maintain this as the absolute low in order to break even if it's Saudi oil, or this absolute low of 44, or an absolute low, sorry about that, or an absolute low of 44 for you to break even with UK oil. So I just find this interesting. So was there anything else in this article? All right, so I think that's just it in terms of this article. So now I just want us to look at this. So now we're looking at trading economics, crude oil production in the world. So as we can see, the country at the very, very top is the United States, which produces 12,833,000 barrels per day. So 1K, 1,000 barrels per day. Followed by Saudi Arabia, which produces, so this 12,000 would be 12 million, because you add the 3 zeros to this number. So they just did it so that it's easier to read. So when you hear 1,000, think million. So 12,000 is 12 million. So United States, Saudi Arabia, Russia, that's the top 3. Canada and Iraq and Emirates is in the 1, 2, 3, 4, 5. So the top 5 is US, Saudi Arabia, Russia, Canada, and Iraq. And after that we have Emirates, China, Brazil, Kuwait, Iran. Nigeria is all the way down here. Alright, it's all the way down here. So let me see. So this is the first African country that is mentioned, if I'm not mistaken. Great. So as I said, I like to put an emphasis on Africa because a lot of the information out there is for all of the other regions. It's very rare to get credible information on Africa. So that's why I'm making this video for a person who's interested in this. So as you can see, in Africa alone, when you look at Africa as a standalone, you discover that Nigeria is the place where they produce the most oil, and this is according to like April 2020 stats, followed by Angola, Algeria, Egypt, and Congo. So first, second, third, fourth, fifth. So this is the top 5 producers in oil, though the quantity is not as much because here we have 1,000, but when we're looking at the global landscape, we see 12,800 from America alone, which is the biggest producer of oil in the world. So this impacts how the market of oil is traded. So remember that when the OPEC was formed, it was in retaliation to a certain cartel that was dominated by America, because America has a high demand in oil. So oil is actually the American dollar is the currency for oil trading. The only reason why the American dollar is what it is because it's used for this particular trade. So if we're using yuans for trading oil exclusively, then everything would be different. So the fact that America has the largest demand for oil and is also the largest producer of oil and is dominating the world in terms of trading oil, because no matter how much the OPEC countries delegate and talk and set prices, at the end of the day they need to sell this in terms of US dollars. So of course this poses a lot of different questions that we might answer as time goes on. So these are the countries that produce a lot of oil. So oil production, right? And for interest's sake, it's just good to have a broad picture of the landscape. Of course, Saudi Arabia dominates in Asia with 12,000 barrels, and then Iraq, Emirates, and China with 3,000 barrels, which is pretty cool. Kuwait is pretty large in oil production. Iran. So there's a lot of oil in the Middle East, as you can see. Indonesia right here, 729 a day. 729,000 barrels each and every day, which is a lot, even though it's not as much as most other countries. India is also here in terms of Asia. Syria here, 25,000 barrels a day. And Japan, 4,000 barrels a day. Okay, so and then in the Americas, we have the US obviously, and then we have Canada, which is about 4,500 barrels a day, which is not a lot, but which is quite a lot. So Canada has some really good ways of oil extraction. We have Brazil, which has quite a lot, 3,000 barrels a day. Mexico, 1,700, which is pretty cool. Colombia, 800. Venezuela, 737. This is oil production. All right. So just keep that in mind as we move on. Then let's look at Europe. So we have Russia, 10,000 barrels a day of oil production, and this is actually growing. And then the second largest producer is Norway, which produces 1,682 barrels a day, which is slightly down from the previous reading. And then we have the UK oil, which is quite expensive, as we've already seen in terms of the 2016 prices. Then we have Italy, Denmark, and Germany over here, Austria. Kind of thought that was Australia, but it's not Australia. Oh yeah, let's check out Australia. It's always good to check out Australia. I love Australia. I think it's an interesting place, that one, and with a lot of creative individuals. Okay, so it's stuck on Australia. So instead I'm at G20. So in the G20 we have all of these countries that produce oil, and here we have Australia, so 349,000 barrels a day. So yeah, so this is what it looks like. So these are the G20 countries. Some of them, like Japan, do not rely on oil as much, and some of them, like America, relies on oil a lot. So of all of the G20 countries, we see that like a significant number of them are exposed to commodities. So I'd say all of these are, because 513,000 barrels a day, I'd say it's okay for their type of economy, how big it is. So I'd say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. of the 20 countries in the G10 are significantly exposed to fluctuations in the oil market. Would you agree? Or would you say that you can just pick the first 1, 2, 3, 4, 5, right? 5. But then 3,000 barrels is a lot. So is 1,000, you know? And kind of like 700. So yeah, you can just look at that in different ways. But as you can see, the world production, demand, and everything is highly dependent on oil, and all of these G20 countries are dependent on it. So moving on here, I want us to look at this. So list of countries by proven oil reserves, and we're gonna have to reconcile this fact. So this is a list of all the countries that produce oil. Proven reserves are those quantities of petroleum which by analysis of geographical and engineering data can be established with high degree of confidence to be commercially recoverable from a given date forward from known reservoirs and under current economic conditions. So I'll just leave it there, and you can read the rest, but we're just gonna go to this. So the countries' reserve amounts are listed in millions of barrels, all right? And there's a column in years until exhaustion, which uses the daily production figures as of 2016 multiplied by 365. So here we have proven reserves, okay, right? And then we're looking at the start of 2017, OPEC end of 2017, BP end of 2015, and other sources and data. So what we're gonna just focus on is just this first column to make it all simple. All right, so the first proven reserves with millions of barrels of oil, right, is Venezuela, number 1, which has 878 millions of barrels of oil, all right, which would take 362 years to deplete, which is a long time. So here I want to go back here and look at the world, right? Look at the world production. So now this is oil production. I told you to keep that in mind. This is oil production, and oil production is not the same as having oil. America is topping this chart, producing all of this oil, but it doesn't actually have all of this oil. What made Rockefeller and them so rich was the fact that they produce oil. They just refine it. They actually don't have it. So number 1 should be Venezuela. But where do we find Venezuela? Venezuela is over here, only producing 737 barrels from a seemingly inexhaustible amount of oil. Alright, number 2, Saudi Arabia. Okay. It's a lot of oil, okay? This is all in millions of barrels. So 297 millions of barrels, which would take 78 years to... So production, million barrels per year. So if you're to produce at the constant rate of 3,000 of all of these barrels, 3,818 barrels, it would take 78 years to deplete. Okay, and Saudi Arabia, let's see how it's ranking in terms of producer. So this is good for Saudi Arabia, and because of this fact, this is why it is so developed as a nation, because they have used their oil reserves to their advantage and are also producing the oil instead of just having it. So this is a very important trait that should be copied. All right. So the third one is Iran, and it has a lot of oil, enough for 145 years of intensive use, and Iran is way down here. All right. Then we have Canada, then we have Iraq, then we have the Emirates, Saudi Arabia, and then the Emirates. So we have the Emirates over here, number 6, all right, and we have the Emirates over here, 1, 2, 3, 4, 5, number 6 as well, which is interesting, which is good. Canada is over here. This is why Canada is a good economy, because it's high up there. Russia produces more than it actually has. It has about 80 million, 80,000 million, yeah, 80 million barrels of oil, right? But it is, that's the wrong chart, but it is able to produce 10,000 barrels a day, all right? So this is Libya as well. So as we can see in this chart, the first country that is appearing in terms of oil reserves is Libya, right? In Africa, the one with the biggest oil reserves. And Libya, like, all right, when I even say the name, all I'm picturing is Gaddafi's face, you know. So he was the supreme leader of that. And next to that is Nigeria. So these are the two countries. But one thing that we've discovered is that America is nowhere in the top 10 of all lists of countries by proven oil reserves. America is nowhere to be seen. The first one is Venezuela. And now tell me what's happening in that economy. So it's very ironic. But if you know what's happening, then you know why it's happening. So Nigeria has more oil than America, right? Libya has more oil than America. All of these countries have more oil than America, but America produces more oil than them. Nigeria is way down here in terms of oil production, and America is number 11. All right, and this is 35. So reserve amounts are listed in millions of barrels. So 35 million, 35 billion. Is that that is enough for that is enough for what? 10 years. So reserves to production ratio. This is the production quality. This is the production in millions of barrels per year. All right. So 831 million barrels a year. All right. And these are the years that you can use the reserves that they have at this ratio. At this ratio. So at the ratio that America is using oil, only depending on their reserve, they'll run out in 10 years. So that's why they have to produce. That's why they have to produce more and more. And at the rate that Venezuela is producing, they have enough to last them 300 plus years. So that is something. And then after that, after America, we have Kazakhstan, and then we have China down here, which only has 17 years of oil, but they need oil in their place. So China is, did I pass it? So this is the world, China right here. So it produces more than it has, and this is just a fact of what's happening. So yeah, I'm just gonna scroll down. Maybe you're gonna see your country. Yeah, Norway is an interesting example because they don't have a lot of oil, but their whole economy is dependent on oil. And let me see where they're ranking in terms of Europe. Because when you look at Europe, you're gonna see this is Norway. It's right here at the top after Russia, but their actual oil is like nothing. Just at 11 years of oil, 22 million barrels a year. So that's not anything. India is also down here, 24 million barrels, 17 years of oil at that current rate. Indonesia is down here, Malaysia, the UK. So all of this is just fascinating in the sense that these countries, according to supply and demand, these countries, if their rules, laws, and everything is on point, these top 10 countries should be the top 10 countries in the world, right? Like, let's just say, all things being equal, just the fact that the oil demand is intense, these top 10 countries should be the top 10 countries, including Libya and Nigeria. But that's not the case. And, there are a lot of reasons why. So, in conclusion, let's take a look at the oil chart. Alright. So, here we are looking at this monster. And this is the drop that it made. My chart is not going to negative territory because it's not a derivative. This was the price chart that shows the CFD for oil, but it didn't go that low. So I guess you should watch this video on gaps that I have. But that video basically speaks about how whenever price moves from an area, and if it makes that move and leaves a gap like this, I have a video just specifically on that, and I show you a lot of different examples. If it leaves a gap like this, it means that it's gonna come back to this gap. So long story short, watch that video, but long story short, oil is gonna rally back to near $100 a barrel. So as we've already seen, the drop in oil was caused by supply and demand imbalance in the largest economies which produce oil, which trade oil, which need oil. And because of that lack of movement in the economy, the financial economy was affected in a ripple effect. And as a result, when things revert back to normal, or as they start to revert back to normal, you're going to see that by the time we're outdoors, oil and gas will be one of the most expensive things. Energy will be one of the most expensive things that we'll have to buy. So it would be great if you can buy it now. If you buy it now, then just watch it go back to 10. So this is what's going to happen. And just watch the video on gaps to get more of how to actually trade this gap here. And we'll be talking some more. So let's see. Yeah, there are actually a couple of gaps in oil that I think it might actually go past 100. But we'll see how that goes. So so this is my thoughts on oil. And I haven't gone into the chart as much because this is not exactly a technical video. I just wanted to go over the whole economy around oil and the largest producers, smallest producers, the largest reservoirs. Oh, but we haven't seen the smallest reservoirs, have we? So let's just make sure that we see that before I let you go. So yeah, so all of these countries have oil reserves, and they produce. Malaysia, Syria, Argentina, Gabon, Australia. I love Australia right here. Congo over here. Brunei, very, very, very rich country. Ghana, great country as well. And Denmark, very dependent on oil. Italy, very dependent on oil as well. So this also is going to give you an idea of how to trade currencies that are heavily dependent on oil, based on their dependency on oil, their reserves, and their productive capacity. So currencies such as the the yuan will be affected by commodities. obviously the dollar will be affected by commodities. But then now that you get this information, you know the dynamic in which it's affected by the oil price. So through this, you have different ideas of how to trade this, because you can understand that America doesn't actually have the oil, but it produces the oil. So it depends a lot on transporting the oil and the tariffs on oil and things like that. Unlike a country such as Venezuela would be a good example, but I would say Saudi Arabia. So the infrastructure in Saudi Arabia means that their oil is cheap to produce and cheap to mine, because they have the commodity and they also produce the commodity. So it's very easy for them to be nimble around it. And the whole fact that you now know that they're OPEC members and non-OPEC members and all of those things. And okay. So I just want to scroll down. I was just curious to see which ones would be at the bottom. And among Ethiopia, which is 97 million barrels a year, Afghanistan, which is interesting because I know there's a lot of oil there, or at least I thought so. Was I lied to? South Africa is here, interesting. Israel over here, Greece right here. So yeah, it's just interesting to just see the dynamics of all of these countries, and also just check out their trade and all of those types of things. Germany over here, 63 million barrels a year. So yeah, all of these things add up when you see the big picture, you know. So it'll be very easy for you to look at the Canadian dollar in relation to what the oil price has done. In fact, let's just check it out. Let's see if there is any relation. So this is a monthly chart, okay? So there's been a big drop recently. So let's see if this big drop has in any way influenced the Canadian dollar. So this is the Canadian dollar. Let's go to the month, and there we go. So no, the month. All right, here we go. So we see that there was a big drop in oil, but there's a big spike in the US dollar Canadian, because the Canadian Canada is one of the biggest oil producers. Oh, sorry. Canada is one of the biggest oil producers in the world. And all right, so Canada in the world, let's see how far down it ranks. All right, so Canada right here. 1, 2, 3, 4, right? So it produces a lot of oil every day, right? And Canada is also number 4 in terms of reserves. It just has a lot of oil, 126 years worth of oil, right? And then what we're looking at now is the fact that the drop in oil. Let me go back to the oil chart so that I can show you the relationship that that I think exists. So there's this huge drop of oil right at the beginning of the year. So this is a period separated, this white line. As soon as the year started, oil started dropping. Of course, it was dropping for a long time. Okay, so in Canada, we see that, of course, it was rising a long time, which means that the price of the Canadian dollar was getting weaker as oil was getting weaker. So it's been getting weak since like 2010, 2011. This has been dropping since 2010, 2011, dropping. So which means oil is getting weaker. And where is it? Canada, yes. And rising, which means the Canadian dollar is getting weaker, because this is USD CAD. So if Canada is getting weaker, this currency rises. If it's getting stronger, it drops. So as soon as this year started, as soon as oil was getting weak, the Canadian is also getting weak. You see. So this is how it works. In a sense, you know, when you want to revert it back to the markets. So through this, well, if you were trading Venezuela's currency or something, you could do that, or the Emirates, or the Russian ruble, Nigerian naira, or the US dollar. So let's look at the dollar quick fast, because why not. So the dollar has been going stronger for a long time. At the beginning of the year, it's getting stronger. So a stronger dollar means weaker oil, because it takes less dollars to buy more oil. So this is why it's been going up. However, it's spiked. So we'll see more about that. So so there's so many nuances, so many ways that you can use this information. But as I've already mentioned, this whole business is an idea generation business. So having this information can help you generate certain other ideas, because now you know the relationships between these countries and their oil reserves, and also what it costs for them to make this, so what the minimum has to be in different cases, and all of those things. So yeah, if you want to learn more about how I trade and how I use all of these things, just get my book. You see it in the description. But other than that, I'll see you soon, and happy trading. All the best.